Okay, let me tell you what is the setup, what it's really about. I mean, it really is a very simple approach where you are monitoring your charts. So what we have here is Nasdaq 100, the 5-minute chart. I just looked at it from the hourly point of view, like over here, and I saw this, and I thought maybe on the 5-minute it will have that pattern that I'm looking for. And this pattern, from the start to the end, it's the same. It would happen on the daily, it would happen on the hourly, every other time frame. So what you see is like there is some sort of organization of price action that's going on. For example, over here was mildly going up, then down and up and down. The trend is up. Then something changes, and that's what I'm looking for. Like you see this candle, it is far bigger than the other candles. Just like this one, right? If you look at this, this is a big candle. Turns out it was the exhaustion candle because it appeared at the end of an up move, whereas this one appears at the end of a possible up move, and then it moved on the other side of the moving average. It's broken the previous levels and it comes all the way here. And then what it does, it gives you that first pullback. And this fruit or this banana is hanging off the branch. Let's consider the 10 EMA as the branch. It touches it, gives you a signal. Let's not discuss whether it was a good signal or not. As we can see, it's a very big signal. So the 5-minute chart at 45 point stop loss is probably not a good idea, because on Nasdaq, I think I like 50 under normal circumstances, around 50, 40 or 30 stop loss for the hourly chart. So what it does, it would give you those two trend candles. So I would call this TT followed by a PP. So this is a TTPP pattern, and it's situated nicely where it has crushed the previous levels, and it's telling you that it's something new now. So you can easily take this signal, and then it would do another pullback. In this case, the pullback was quite bad. It went all the way up. And then there's the continuation. As you can see, the first pullback was almost a pause, right? This pullback is a proper pullback. And then you have again the continuation, as you can see here. So now the trend is confirmed. You have first pullback, you have second pullback. It goes down, creates another pullback, and then it creates that channel, which means that it's now losing momentum. And then comes the second part of the trend, where you will get a deeper pullback. And when it does a deeper pullback, it will be more complex. And in most cases, it will create what is known as the flag pattern, or the counter kind of a rally or a little trade or a wedge. I call this like a contracting channel, right? So this is a bullish channel, but within a bearish trend. And it doesn't have that strength and momentum of going up. It's actually a pullback. So if I was going to go to, let's say, a 15-minute chart, or as you can see here, for a 15-minute chart, it's actually a second pullback. If I were to go to a 30-minute chart, it is actually a first pullback. So you have a trend candle, a pullback, and a pullback. But if you just stay on your time frame, which in this case is 5-minute chart, so for the first pullback, you'll take the signal. For the second pullback, in this case, we would not have taken it because this is a trend candle. And then this, even if you took it, probably it's a rent, almost a valid signal. So you'll take the first and the second, then you wait for it, let it do a deeper pullback. And when it does that, you want then a breakout. So in this case, we have a trend change breakout, a momentum breakout. And in this case here, what we see is that it is breaking a channel. So there's a 3 candle momentum candles. It breaks that, and then it pulls back. So you have a TTT, not very good T, but at least this T is good. And then you have a pullback and a pullback, and you received a 1 signal. You would gladly take this trade. And this is, I mean, I don't have to talk about anything else. This is all that I'm looking for, and that's what we need to do. Now, in many cases, this momentum breakout would come out of a tight trading range, like something like this, right? So for example, if this didn't happen and it was going sideways and suddenly this happened, we'd be very happy. In those cases, it will pull back and then retest those levels. Let me find one. Okay, so on Friday, NFP, you can see that the market was in a trading range. You can see it's a tall trading range, and some people would even want to like draw something like this, right? And then what happens is that when the news volatility hits, it has given you clear indication that bears is the way it wants to go. Granted, we have a spike up, so there are some bulls there, and then it goes, really breaks out strong, pulls back, gives you the first signal, goes down, and then what it does, it creates, in this case, let's call it a horizontal channel. So the one that we saw earlier was a contracting channel, and it was a bullish channel in a bearish trend. In this case, it's a trading range, and then if it breaks out again and then pulls back and gives you a signal, you'll take that. In this case, we won't take it because we know that the market has moved quite a lot, about 340 points. We have one impulsive breakout and a pullback and then another one. So if you quote this, that's fine. Then we find another one. Okay, so in certain cases, we have a kind of a reversal, a V reversal, right? In this case, the price goes down, gives a signal, goes, gives another signal, fails, creating a double bottom, and then starts to go up, breaks the previous swing high, giving an indication that there is probably a trend change. This is your early signal. This is your second signal. But the clearest most signal was this one, where you have a clear momentum breakout, and then you have a 1, 2, 3, 4 candle pullback. Took this, and you're loving it. You have one more here. This is probably too late, and in this case, it fails and becomes a deeper pullback, actually a two-legged pullback, and then continues again. So this is again another case where you could draw something like this and like this. So again, it's a flag pattern. It breaks out, retests it, gives you a signal here or here. You take it and it becomes a trade. And then in some cases, what happens is that you have a trend breakout like we have here, a T and a TTPP. You take this trade, then it comes down, fails to break, creates a double top, then creates a triple top, and at that time, at that spot, you consider this as a trading range. So this is a horizontal channel, then it comes to it, pulls back, gives you a signal. Difficult to take this one, but then when it breaks out, and then it pulls back, touches the branch, you take the banana signal, and it's a beautiful trade. Look at this. This is the whole banana pattern. So one, which we would call in Elliott waveform, the wave 3, and within that, the first pullback or the second pullback we take, and then it turns into a trading range, which from Elliott wave point of view is going to be a wave 4. And then what we do is that we wait for the high of the wave 5 to be broken, or if there's a tighter range, like for example in this case, if you were considering this as an internal trading range, right, over this, then it breaks out, pulls back, you take the signal. This is your early signal, first pullback, that's your second pullback. If you took this without touching the branch, then you probably got a rent, but immediately you got a 5-hour winner on this. So that is really it. I hope this was helpful.